Okay, one of my favorite things about trading is you never finish a day without at least one thought of, man, was that stupid, right? I mean, you can have a huge money day, doesn't matter. There's never a day, and I tell our members this all the time, there's never a day that you finish the day and you look back and say, I did everything perfect. Um, you have to get used to that fact. You have to get used to the fact that you're going to look back and say, man, what an idiot. I can't believe I did that. Or I left money on the table. You're always going to leave money on the table. You're never going to sell the top. Um, you're never going to buy the exact bottom, and so on. The trick is to take money out of the middle. So I've been doing this well over a decade, and I don't think I've ever had a day I didn't look back and say, wow, did I do something stupid? But the trick is to be able to laugh at that and then say, okay, well, maybe I can correct that moving forward. But I think I've got a pretty good trading lesson from the dumbest thing I've done in a while, right here on First Solar. I made a great call on this today. I don't mean to sound like I'm bragging, but it really was a great call. Take today's candle out of it. This was on watch in our chat room because it was so beaten up. Okay, went from 26 something all the way down to 18 over the course of a week. That's the picture of a stock that's overdue for a bounce. Okay, so you can see a nice bounce today. Now, how did I call it in the chat room? It did everything I wanted it to do. All right, it stayed in a fairly narrow range. These are 5-minute candles. Stayed in a fairly narrow range for the first half hour. That's really what I want a stock to do when I'm looking at it for a bounce play. Okay, and this is one of the rare occasions where I don't mind buying the high of day break. It's the high of day break that usually gets your momentum. All right, because it's so beaten up, then all of a sudden that symbol starts lighting up the new highs ticker, shorts start to cover, longs pile in, and so on. Okay, so my call was 1909, which is basically right here, and the stop 1895. 14 cents risk, and pretty quickly they went to 1927, and I sold a chunk just like I always do, to make sure and pay for the trade, put a little money in my pocket. Here's what I struggle with still after a decade, is oftentimes I'm impatient and I'll go to a break-even stop, so that way I can have what I call hopefully an accidental home run where it never looks back. All right, now I'm going to show you why that's a mistake. And right here, it's not uncommon for any stock that breaks a high, breaks its opening range, you get a breakout. It's not uncommon for that stock to come back and retest that breakout area. Okay, so the entry here, now if I'd have had an entry down here somewhere, or down at one of these moving averages, then I would have been fine. But I scalped some, moved my stop to break even, and look what happens. It comes right back down, a normal retest of that area, and then, wow, never looks back. Okay, so what happens here, here's the entry, here's a scalp, and then I'm out right here. And literally at the low of the day after the high of day break is where I was out. Okay, now how should I have handled that? There's two ways. One, let a stock break the high of the day and don't do anything. Now, I wasn't going to do that because I want it in. So the right way to handle it is just let your stop work. There's nothing wrong with scalping some here, okay? But then let your stop work on the rest, because if you take some off the table here and then it comes back down and stops you out, your loss is going to be negligible, right? You put some money in your pocket here, you get stopped out, commissions. It's almost not even really a loss. And this is something that I've struggled with. I go to a break-even stop as quickly as I can, and it's really unbelievable that I still do it to this day. I'm here all day, every day, so I find plenty of trades, and I can work my way up, and every once in a while I'll get the accidental home run, right? But going to that break-even stop 5 or 10 minutes after is just asking to get stopped out on the rest. And if you can't tell from the video, I'm a little peeved at myself, but and a lot of our members did a lot better than I did. Okay, I still made a little better than sandwich money on the scalp, but look at this. So another way to handle this going forward, if you take a high of day, or don't take the high of day break, and then buy that first pullback to that 8-period moving average, nibble here with an arbitrary 10 or 15 cent stop. Okay, then you're buying that pullback instead of getting stopped out like the fool that I was today. You could easily look at this and say, well, couldn't you find another way back in? And that's true also. Nice sideways move into the 8 here. And I was just off doing something else. I didn't continue to give First Solar all my focus. So, every now and then I'll make a video, and then the whole video will be about how stupid I am. And I think that's probably important for everybody to do every now and then. It's humbling, and you have to be humble when you trade. But this is a little embarrassing. what was I going to say? One other way to handle it is you either take the breakout, you buy the pullback, or you let your stop work. No, so that's the summary of the three. The one thing you don't do: buy the breakout, go to that break even stop. I think I'm going to put like size 27 font notebook paper right over my monitor here and say let your stops work. Okay, there's nothing wrong with scalping, but let your stop work on the rest. Okay, and something I'm fiddling with now. I tell our members too: don't let today, when the Dow's up like 250 points and the SPY broke out. Okay, I can't type today. Don't formulate any conclusions on how to trade on today's intraday setups or candles, because look at the SPY here. You know, a big breakout. You kind of had a big cup and handle and a big breakout today. I don't know if it's going to continue or not, but this isn't the day to look back and say, hey, I should have just used the 20 period moving average. That would have kept me in all the way up to here, right? Well, that's on the SPY, but on any stock, because today was a bit of an anomaly. Anyway, I'll quit babbling about that, and I'm just going to go over the calls that I made. So first, solar was one. It was a $1.96 move on 14 cents risk, and you know, that's a great call to brag about, unless you knew how I handled it. But I'm hoping somebody watches this video and learns from my mistakes. If anything, I err on the side of caution. I'm always protecting against losses, and that's a huge part of the equation, okay, to being a great trader. That's a huge part of the equation. However, leaving that much money on the table, you know, you can't be doing that either. So you've got to find a balance between protecting against losses and letting some of these big moves work for you. Okay, another call of mine, GTAT. Looked like this when I called it. Looked like this. I called it at 562, 555 stop, so nice and tight, and that one took off pretty nicely. And not a huge move, but percentage-wise a nice move. It went to 583, so 21 cents move on, what did I say, like 7 cents risk? KBH. I don't like high of day breaks, but this one made sense. KBH was in breakout territory on the daily, and nice volume today, so that was kind of a tell. Sideways into the 8, so I don't mind calling the high of day break here over this base, 1161. Worst case stop, 1155. So 6 cents risk. Okay, there's the break and 6 cents risk, and that one ended up going to 1188. Again, not huge, 27 cents on 6 cents risk though. And see, these are the ones that I look for. They didn't come back to my entry. That one didn't come back to my entry. GTAT didn't come back to my entry. So I had better trades in those. And if you notice, well, anyway, those were what I would call, I don't want to say accidental home run, because they weren't home runs by any stretch, but they didn't come back to my entry, so those are easier for me to stay in. Let's see, what else did I call? EMR. Whoops, that's ENR. EMR, I had on watch as a bounce play because it was down 5-6 days in a row, whatever, down to the 200-day moving average. So I had it on bounce watch, but then today with the market, it gaps up. The bounce play entry would have been the high of day break right here, the break of the 30-minute high. Worst case stop somewhere down here. I didn't take that because I didn't see it. However, I did call it, let's see, right here on this little green candle I called it. I talked about this in a video yesterday. Oftentimes on a strong stock, you'll get a pullback in one touch of that 20 period moving average using 5-minute candles, and that's what this is what EMR looked like when I spotted it, and I went ahead and called EMR 49.86 with a 6 cent risk, and that stop did hold. And again, not a home run, but it went to like 50-12. Okay, so not a huge move, but a very tight stop. 6 cents risk right in there. I'm kind of proud of that one. And that was it. I made one other call the entire day. So I mean, with the market up that big, I definitely look at my balance and say I should have done better. But one other call, I was trying to catch a late day covering on PAY. PAY was getting killed. Nothing pretty about the daily chart, but it's grinding lower. I thought, okay, we might have some shorts diving in trying to make some late day profit down here, and I was looking for a bounce and got stopped out somewhere in here for about a dime. And pay ended up with an ugly close and an ugly daily, but probably needs to be watched around 30. I don't know. There's nothing pretty about this chart right now, though. Kind of a big, ugly reverse or inverse head and shoulders. So that was my uneventful day. I had some good ideas, and I still need to work on my execution. I'm going to quit babbling, and we will talk to you guys tomorrow.